Employing people? Well, don't miss out on up to 10.5k a year as we talk about employment allowance. Watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, that includes employers. I think it can be both an exciting and a scary time to become an employer. And in this video, I want to talk about something we see just an opportunity that's missed all the time. We do several of these a year where employers have come to us not knowing about this allowance. They didn't know how to claim it. They don't know they could, and they didn't realize how much money it could save them. So in this video, I'm going to be talking to you about what you need to know about employment allowance, how it works, and how you claim it. Now, before I do, if you do like these videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more just like this one. So then, if you're an employer, and that includes employing yourself as a director, you could be eligible to claim this employment allowance as it's known. Sometimes people refer to it as employer's allowance, but employment allowance is its technical name. So then, how does employment allowance work? Now, you're probably aware, as a bit of recap, that when you pay yourself or your team, depending on how much you earn, your business is going to need to pay some employer's national insurance. It's like an add-on cost on top of their salary. You know, you might have your pensions. You've also got this employer's national insurance. Now, in this tax year, the 25-26 tax year, as I'm recording the video, when you pay them more than around £417 a month, that's quite a small amount, you'll have to pay these national insurance contributions on top. Now, that's quite lower than it was in the previous years. So before April 2025, you used to be able to pay up to about £758 a month before you would get to this limit where you had to pay. So it's quite a jump down. So you should start, if you've been employing people for a while or yourself, you might start to see employers' national insurance where you haven't seen it before. So then when you exceed that threshold, you have to pay these employers' national insurance contributions on the amount of earnings above that £417, and it's at 15%. Now that rate is up on the previous year as well. It's been 13.8% for a long period of time. So the combination of national insurance kicking in earlier on these earnings added to that increased rate of percentage up to 15% is going to make it potentially, we'll talk about that in a minute, why it's potentially a much costly payroll year. However, the good news is that if you qualify for this employment allowance we're going to talk about, you can reduce that employer's national insurance bill by up to 10.5 grand a year. It's quite a big amount of money. Now, the way it practically works is that your payroll software calculates, as you'll know if you've done this, calculates and chucks out a PAYE bill, as it's known, a pay-as-you-earn bill, which is a combination of the tax and national insurance that's owed. You've deducted it, so say they're on 30k a year. Obviously, you don't pay your employee the full 30k. You'll have an amount on the pay slip to pay them, and the rest of it you pay over to the revenue each month. And built in there somewhere, if you're at that threshold where, and it's most likely you will be, particularly at 30k, for example, where you're going to be paying this employer's national insurance as well. And it's all bundled into this one bill and you hand that over. But with employment allowance, before you do, you look at how much of that bill is actually employer's national insurance and look at that part and you deduct that amount from this annual 10,500. So in this example, we're just going to presume you qualify. We'll talk about if you do in a minute. But this 10,500, you just knock it off. So it's likely for most small employers that in month one of the payroll year, and this allowance goes from April to March, it's like a payroll tax year. You wouldn't pay anything in that month one if you're like a small employer. And then you kind of carry that balance forward to the next month and you do the same. So say, for example, we're April 2025, your NI bill, that part of that big bill you're going to hand over is £1,000. You just knock that £1,000 off of your allowance and you wouldn't pay that part of the bill. You should be paying physically out your bank £1,000 less. And then you'd use the remaining 9,500, because you've knocked your £1,000 off, against the next month's tax bill. And in May, you'd do the same. You'd work it out, how much of it's employer's national insurance, deduct it from the amount, carry it forward. And you just keep doing that every month until you've used it all up. Now, for larger employers, you might even use it just in month one. It might all be gone. But for most small business owners, that's actually going to carry on for at least for a few months, if not the entire year. So depending on the size of your team, it might be your entire employer's national insurance bill is zero. So, and as I say, it is an annual allowance. It runs in that payroll year. So as you can probably see, for really small employers, you might actually pay no NI at all, which is just awesome. For me as an owner, I think myself, this allowance is one of those very rare kind of pro-growth allowances that's out there for employers. And it really does help bring the overall cost of employment down in a world where, for not only the reasons we just said, if you factor in accounts, pensions, holiday pay, cost of compliance, employing just one person really does cost quite a considerable amount of money. This is one of the more pro-growth, if not the only kind of pro-growth allowance that's out there in the employment world. So if you can qualify, it's a really, really good thing. So then the question that you're probably asking then is, well, do I qualify for employment allowance? So generally, and it's all these things with tax, there are very specific criteria. And I would say to you, go to the revenue site and have a look. But in most scenarios, if one, you're a business, and two, you do less than 50% of your work in the public sector, so like, I don't know, a local council or NHS services, then you can claim it. However, you can't claim it in general terms. This is the most common scenario where you can't claim it, is if your company only has one employee that's paid more than £417 per month in this tax year when we're recording this video, and that employee is a director. So basically, it just means that if you're a sole director, you're just not going to be able to claim. And the reason they did this is because, fun enough, when they launched employment allowance many years ago, first thing accountants and payroll providers did is work out, actually, this really helps the tax efficiency. If we set the pay at a level where you would pay some employers' national insurance, we're maximising the amount of corporation tax deduction that we're going to get on their salary, and actually won't pay any employers' national insurance because we can use this particular relief. Wasn't what it was designed to do. So sadly, HMRC closed that loophole pretty quick. So yeah, single director scenarios, it's not likely to happen. That's the most common time when you're not going to see it. And as I said, there are some very specific criteria around also when you couldn't do it, but they're the most two scenarios where you kind of can claim it. So a lot of small businesses will absolutely be able to claim it. And I think one key criteria to keep in mind on this is if you own multiple businesses, you will likely, and I say likely because again, it's very technical as to whether this applies, but if you just think in general, if I've got more than one business that I own, it's unlikely that you're going to be able to claim it across multiple businesses. It's normally only one business, and that actually does catch entrepreneurs up quite a lot. So presuming that you qualify, you're then going to ask, well, how do I actually claim it? Because usually the answer is very straightforward, and that's that you claim it within your payroll software. So whether you're using something like Xero, or you're using HMRC's basic tools, or if you're like us and we're a payroll provider, we'll use a third-party program, it's all the same. You actually do it inside the payroll software. So in a normal order of events, you'd just run your payroll and you'd submit what's known as an RTI return, a real-time information return. It says to the revenue, that's how much I've paid everybody per person and things like that. And you actually claim EA, employer's allowance, by doing another one of these returns. It's known as an employer payment summary, or an EPS as it's known. And in most software programs, it's literally as simple as clicking a box next to the employment allowance and submitting one of these EPSs, these employer payment summaries, early on in the tax year. Now, you can submit it later in the tax year, it doesn't matter, but obviously if you want to not to be paying money as early as possible, you want to do it early on in the tax year. And you should only, in theory, I say in theory, have to send only one of those a year. Now, I say in theory because HMRC's back-end systems with regard to PAYE is absolutely, from my humble opinion, the worst part of their systems. It's an absolute crazy nightmare. We've got problems going on with clients we've been trying to resolve for 3 odd years, and their advice to us is, well, complain. And even the complaints teams can't deal with them. So I think what you would do is, in reality, is if you are claiming this for the first time, is make sure you've got a business tax account where you can see your PAYE, your payroll details and the amount you owe them, and just check that it's working properly, that the amount it says in there is the amount that you've been paying, and it doesn't show you owe them money, things like that, because it's so common for those figures not to match. And if you spot this like 2 years later, it can be a horrendous way. So just make sure that if you have got, and you are doing this yourself, you check in that back end as well to make sure that HMRC have recognised the fact you've submitted this. There is a bit of delay sometimes when you submit that first EA. So I'd always wait till about the month after to check, say middle of the month. If you wait till around the 22nd, there are some specific time limits, but around the 22nd of the month following when you claimed it is always a nice one, I think, just to make sure they've had time to process it and just check to see whether it's all good and everything looks as it should. And that should be it for claiming it. It should just reduce your bill. Your payroll software should show you pay this amount, but don't worry about this bit. We're claiming allowance on that. And you just hand over the lower amount of money, but do check on the HMRC end that it's all okay. And then if for some reason you need to stop claiming, again, the revenue guidance tells you there's different ways to do this, but in all honesty, it's as simple as it was to claim it. You almost untick the box and then submit another one of these EPSs, and that should stop it. But be careful with this, because if you read the HMRC guidance kind of on its own, there are points of it that make you think, well, if my situation's changed and I now no longer qualify, I'm going to have to repay it all back. But it's not actually how it works. In most circumstances, if you qualified at some point during the year, you qualify and you can have it for the whole year. You just don't want it rolling into the next year. Then you would have to kind of repay that extra national insurance you should have paid. So just make sure that the tick's either on or off for the relevant year. But yeah, just be careful if you are doing this yourself, that you're going to Just make sure to read the guidance and make sure you're unticking it and ticking it at the relevant points. Now, if you are watching this and you're thinking, whoa, I've missed out on this already, oh, I can't believe it, that's it. Don't fear, because I've got good news for you. You can use the software to actually go backwards and claim previously up to 4 tax years, which is very, very useful. And then you can actually request a refund from the Revenue and Customs. And remember, of course, you're only going to get a refund if you've actually paid any employer's national insurance. But we get so many of these a year where people haven't spotted that they could have done this. Bear in mind, in previous years, the allowance wasn't as big though, it was less than half. But I mean, that's still not immaterial amount of money, is it? When you're looking at 3, 4, 5 grand a year, that's going to be quite a big claim. So you can do it. You just need to submit the relevant reports. I would say it's relatively tricky to do though. And bearing in mind the money you might be reclaiming, it might be one of those where you just seek out some professional help to help you do it. So, but absolutely you can go and claim this if you qualified in that year and you haven't done it. And then finally, we talked a lot about, limited company sort of name dropping in here and directors' salaries and things. But just as a reminder, you can be a sole trader or partnership employer as well, or that limited company, and you can still claim. I mean, it's most commonly used by a limited company, and particularly when you've got, say, a very small employer where you've got a director on a tax efficient salary and then they employ their first person, so they've stuck them on 20 odd grand, it's likely then they're going to be able to claim. And it really does help both to get that person paid without paying any national insurance from the employer's point of view, and also covers off a lot of the directors, if not all of the directors in that scenario, and their national insurance. So it can help them get paid very tax efficiently when you take into account all the other taxes. And we've actually done other videos on paying your director tax efficiently, so do go and check those out. And that's the basics. So if you do have any questions, please do drop them in the comments below and I'll give you my best to give you as many thoughts as I can. And if you have enjoyed this video, please do click on the subscribe button and share it with anybody you think needs to know this information. And I'll see you in the next one.